One thing that every unprofitable trader has in common is they don't understand when to apply risk. Sure, every trader understands risk management, but few traders know how to actually use it. So I'm going to give you a full step-by-step plan on how to do this. This comes down to three key elements. The first is understanding what condition the market is in, meaning what direction are you seeing the market moving towards, and do you expect volatility? Now, there are two easy ways to do this. The first of which is understanding where we are at relative to the volume profile from the previous day. If the market is under yesterday's value area, lean bearish. If we are above it, lean bullish. But that's just one part of condition. You need to understand volatility, meaning how fast the market is likely to move. So the way we're going to do this is twofold. One, we're going to look into areas of either low or high volume. If we're trading into a low volume area, expect fast price action. And if we're trading into high, expect choppiness. The second is going to be understanding gamma. Now, gamma is essentially the positioning of options dealers in the market. And if you are in a negative gamma environment, then you need to understand that the market is likely going to move very quickly and breakouts are favored. And if you're in a positive gamma environment, then you're likely to see failed breakouts and more reversal strategies favored. Now, I post gamma reports every single day to my free community. If you comment the word join, I'll DM you an invite. So that covers condition. But next, what we need to talk about is understanding what your A+ setup is. An easy way to do this is to take your trades from your broker, or if you have a trade journal, and put them into AI and ask, what is your most and least profitable windows of time during the day? If you are in a time where the market is a little bit less likely in your favor, then risk less. You also need to understand in which conditions do you do well. So this takes some time and understanding of yourself. For me, I know that I do very well in gamma negative environments. And then also when we're trading into low volume, and you're probably thinking, oh, that sounds like a lot. Yeah, that's how you actually become profitable, by doing that kind of boring work, not by watching a bunch of random videos on YouTube. So that covers the first two of three ways to define when to apply more risk. Now, I want to be very clear. The last one is dangerous, so I'm going to trust you with this. Part of your edge is you. Part of your edge is understanding when to apply the gas and when not to. But for most traders, the gap is that they don't trust themselves. So I'm asking you to sit down and find that trust within yourself by gathering your data, by reviewing your trades, by learning to trust your intuition. The only way your intuition is going to actually speak in the right way is once you truly believe that no matter what happens, no matter what drawdown, no matter what losing streak you're on, that you have an edge and you have validated this. And whenever you think from this perspective, that voice inside your head becomes much clearer because it's actually guiding you towards what you think about the most. And if you believe these things, then you think you are going to be a successful trader, and you have to listen to that voice because it is going to be guiding you towards whatever you're thinking about the most.